Hi guys, my name is Harry Yotis. I've been a professional trader for 20 years now. Way back in 2005, started working for National Bank, one of the big banks here in Canada. And for the past 10 years, I've been trading my own account. So let's begin with a daily market update for Friday, the end of the week. This candle right here, December the 5th, okay? So in December, there's going to be as we mentioned yesterday, it's going to be a very slow type of month going into the last 2 weeks. I expect that maybe we'll start picking up some activity into the Fed, but then after that, it'll start slowing down dramatically. So I'm not really trying to get into anything new here. Maybe I'll do a little small type of trades that might last 2, 3, 4, 5 days max. Pick up some kind of small type of singles, if you will. But generally speaking, the stuff that you bought around here after the flush, I'm just riding it. Not looking to enter anything new. Okay, so let's begin with the S&P 500 here as usual. Technical picture is again bullish. Let's bring in the moving averages. We are trading above that red 50-day moving average, floating up. Okay, looks pretty good. We're above it for at least a week. That checks all the bullish boxes. And what I was hoping for the past couple of days or weeks, whatever, is to close above this neckline of a double bottom type pattern, which was at 685. And yes, today we closed at, what was the close? 685.69. I mean, we were high. We went almost to the higher. We were trading at 688, which was higher than the close, the highest close ever, but not the highest point ever. Okay, I suspect we go drift higher above that, especially after the Fed. But as of right now, the picture is fully bullish because we closed above here. Let's see the follow through going forward. Of course, we don't just look at the technicals; we also pair it with the sentiment. And now we still at fear. We were at really extreme fear, and we were hoping, as the Oracle predicted back at these days, that we would get to neutral and greed. We're not there yet, okay? So we're at neutral. But if you can remember everything here, market momentum, all the sub-indices were at extreme fear, extreme fear, extreme fear, extreme. Now we're getting to neutral here. Still, the stock price strength is at extreme fear, but then we're dropping to fear here, neutral on the volatility. And safe haven demand is pretty greedy, and still fear. So we're not completely out of the woods yet in terms of sentiment, but we still have more room to go. I still think we get to at least neutral and probably greed and touching extreme greed. Okay, what came out yesterday, I forgot to mention the sentiment, is the AAII Investor Sentiment Survey. We'll talk about it today, and yes, we're getting a lot of bullishness coming back. Okay, more so than before, which is higher than the 37.5%. We're at 44.3%. The 37.5 is a historical average, and the bears are pretty much at average, okay? This is a good start. It's not enough to really rein in all the bulls into this market, which is what I love to see. We should get this for the next at least 4 to 6 weeks of extreme bullishness with this dropping down lower. That's why I suspect that as we continue to go forward with these two sentiment indicators and the technical picture, I suspect that we might start not just going higher into the end of the year, but maybe into January and February and maybe into March. But at least maybe into January to get things really like 6 weeks, 6, 7, 8 weeks of extreme bullishness with very little bears. I want these bears to disappear. As long as these bears hang around, this market is going to go higher, much higher, which is good, I guess. It's nothing wrong with a bull market. We prefer those to bear markets, okay? So I suspect that we not just ride higher into the end of the year, but into the new year as well, okay? So what is the big macro event that came out? Well, let's just conclude this technical picture with a bullish ranking, okay? In case you weren't clear, it's bullish, okay? So let's move into what I like to usually talk about in the second segment is the macro if it comes out. And today, yes, we had the core PCE come out, which is the Fed's favorite inflation indicator, but it's delayed to September. Okay, we got 0.2%. We were expecting 0.2. Not a big deal. It's just confirming that inflation is pretty low, but still sticky. Okay, so that's not really going to affect the Fed. And as you can see, the Fed Watch tool, 87% chance for December 10th, a rate cut. Okay, so we're probably going to get a cut, which means this market is probably going to rise into the Fed, I suspect. Okay, and if the Fed sounds dovish, give some kind of like tip of the hat to the market, I think we go much, much higher. Okay. So since I'm really not taking any new positions, let's talk about a recap of what we've seen in the past couple of weeks. Okay. And the interesting side of this is Bitcoin. Okay. This to us was the capitulation day that ended, but we still had some volatility going forward. However, if you look, it still hasn't broken below these lows and it's still holding. Okay. The negative part of that is that it could be a bear flag before the next move down. Okay. This is why, as I was bullish on the market after this capitulation event, like if you remember, we were bulls after this candle, bearish engulfing candle didn't materialize. We got really bullish here. Told everybody to buy. Okay. That's why I didn't want to play Bitcoin, because Bitcoin took a little bit of a huge hit, and it's probably going to stick around these levels, not go up too high going forward. So I didn't want to have a huge Bitcoin exposure. I still have Mara that I took in a long time ago, the Mara trade. We were long around these levels, looked good, and then crashed. So this trade is the Mara trade. Again, it looks like a, bear flag. It doesn't look good at all. I expect to lose on this trade. Okay. MicroStrategy, let's look at them all. Same thing. They'll all be the same. Clean Spark, the one that everybody loves, better. Doing better, but still hovering around these areas. Okay. What we want to see, okay, is Bitcoin. Bitcoin not play this bear flag out and go into new lows, because it can. Because right now all of this sentiment is very bad. It's not that bad. It's let's say medium bad, because we sold everything that they had on this day. But I wasn't super bullish because the damage was extreme. Okay, so I don't plan to play Bitcoin in a long time. What I do plan to play is market stocks, which we'll get to towards the end. Actually, let's get to it now. The market stock that the little trades that, like, remember I just said in the beginning of this podcast that I plan to take on no new trades, but maybe take a little, pot shots at, trades that might be singles that can, hold for maybe 2, 3, 4, 5 days and then exit. We did that on one of our trades on Microsoft. Okay, the Microsoft trade, when it touched this level here, we remember this is a long-term support. Once it touched, we entered a put position. We sold a put spread, and we got rid of it up here. Okay, yesterday, not today, but yesterday, I re-entered another put spread on Microsoft, the 5 delta put. And it's playing out okay because it went up here. And I expect to get out of this very quickly. Like any type of pop like this, boom, I will realize that the profit. If I get to like a 50% of the max gain of this put, then I'm going to get out. Okay, so it's just going to be a quick little trade here and there. I also took one on CrowdStrike today. Okay, sold another put spread. Deep out of the money, expect to collect as it goes higher, push up. If it pushes up higher, as I suspect it will with the market going up, I'm going to get out of it very, very quickly. So it's going to be this is not an A+ type trade. I would call it like a C+ B- type trade. Okay, I'm not super confident and go super big. So and I can manage it if it ever goes down. So this is the type of trade that I will look for going forward, although it'll be very, very difficult with the VIX at such low levels to sell premium. Okay, so we have to look at different strategies. We might have to combine it with some kind of long call spread as well. So that's just neither here nor there. Just to show you that going forward for market stocks, I'm not going to look to do anything big. I'm just going to ride what I have here and sell on the way up. My highest conviction trade is gold and the precious metals. Gold sort of consolidating at these levels. Okay, not breaking down. This is pretty good. And of course, GDX, because I have juniors and GDXJ. Remember, let me reiterate my GDXJ strategy. I think on a monthly chart, we revisit these highs at 179. That's my take, okay, over time. It's not going to happen immediately. It takes a long time to get there, okay, but I think this is the better trade going forward in the gold space, okay? And of course, what really is shocking and surprising is silver. Look at it. Let's get out of the monthly chart, day chart, holding the highs in a high tight flag, breaking to highs. This is beautiful. Alleviating all of this pressure down in the stochastics, RSI, and all that. So I am really liking this action in silver, okay? And a lot of my silver juniors are performing very well. I have two main ones, one that's really performing well and the other one that's performing well, not super well. But I am light on the majors. I have sold a lot of the silver majors that I had, still holding. Not as big as a position as I had before. But I have the physical silver and big in the juniors and a little bit in the seniors. So I love silver more than gold at this point. Okay, so that's it. Let's recap. SPY, bullish. Sentiment, not as bad, getting to neutral in greed. And this one especially, I expect this to continue to play this pattern out of a lot of bulls jumping on the bandwagon with the bears dissipating. Okay, that will change my mind if I see it going forward and I see this type of development. A lot of bulls with diminishing bears for like 4, 5, 6 weeks straight. Okay, it's going to take time. It doesn't happen overnight. Okay, Fed watch tool, we're going to cut. Okay, forget it. Just put it into the bank. We're going to cut next week. Okay, how the market reacts, let's see. I say it's positive. Okay, Bitcoin, yet to be determined. Not a favorite of mine. I'm leaving it alone. For the Bitcoin bulls out there, you better hope that this is a series of higher lows and it goes higher. It could. I suspect it does go higher with the market, but just not that much. Okay, and of course, gold, liking it going forward. Silver, loving it going forward. So that's it for today, guys. Thanks for watching, and I'll see you next week with another daily market update. And if you like what you saw, just drop a comment, like, and subscribe. And I'll see you guys next week for another exciting trading adventure. Later.